The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We are going to take a look at the German DAX today. You can see we're completing a little bit of a Gartley down there. Right at the low is what's happening so far. Now, if that fails, that means that the market is probably going to go lower. This market's been much weaker than the rest of our markets, and that's not unusual. If you remember, we want to look at the FTSE next because it is doing pretty much the same thing, only it's a little bit more bullish. And we'll bring this up so you folks can take a look at it. You'll see that that's the same pattern that we had yesterday. Now, I've had two emails yesterday that I didn't know how to answer them because the question was, how did I know the market was going to go down yesterday? Folks, listen to me here. I didn't. It was what we call a swag, a sophisticated guess, and that's all I was doing was just looking at certain patterns. The lead pattern, of course, was this one here with the DAX index. Look at the NASDAQ. It was a perfect three-drive pattern. We did this in a one with a lot less time involved. We do a 1 hour, I believe, on that, and that showed us that the time and price and everything was lining up just about perfect. So that's all I was looking. Here's the pattern. Sometimes they work, sometimes they don't, and this one just happened to work. If you count the bars from the low on the 21st to the high on the 30th, and the low on the 3rd to the high on the 10th. Or the 12th, they're going to be pretty much spot on. You were right at your 1.618 level. You're also looking at a 50% retracement in the New York Stock Exchange Index, a 61% retracement in the Dow Jones, in the S&P 500, and that's really all that I was looking at. I was watching those patterns in the stock market with the planetary things because those are big things that were happening. That stuff that I looked at and I thought it was big. Look at this, folks. This is what happened. I hate to repeat this, but this is the only way we can really understand it. You can see here, this is what happened on March the 5th of 2009. You see how those were lined up together right here? Okay, that means that something really big was happening. And hold on just a second here. I've got to turn off the limit minder. Something good is happening here. Let me figure out what it is. I hope it's the gold. Let me see what we got here. And no, it's the stock market going down a little bit more. Anyway, I'm just very bearish stocks. It's got a real chance here to do some serious damage. Last night, folks, all we did was make a 382 retracement in the Dow Jones Industrial Average and also in the S&P 500. We've already given 25 handles of that back, so that's not a good sign. I know the chairman is speaking, but we'll have to see what he has to say. I called him this morning to see what he was going to say, but he wouldn't give me any information on that. So we'll have to do this ourselves. When we do these patterns, folks, all they are is a good way to enter the market with risk control. That's what it's about. They do have a positive expectation of winning, and the key word there is expectation. It's an expectation of winning is what it is. It's nothing more, nothing less. So you've got to remember that. Now, I wanted to share one other thing with you around the gold market here because I think we're getting ready to have something pretty big happen in gold. I'm not sure, but I want to show you two things. First of all, this is the pattern we were talking about yesterday. This is that 135 pattern where we have higher bottoms. You see, folks, we've been having higher bottoms since way back in March. We had them in March, April, May. We've had 3 of them so far in May, and the market is starting to move higher. That is a sign that, we made that that big high up there at 1788. We came all the way down to 1650. We dropped $130 an ounce. We rallied up to the 78% retracement, and right on the money. That's where we went short. We covered that short at a 711, and now we're looking in the long side of the market. Now we're still looking. We're going to be switching over to the August contract very shortly, and I'll show you why. Right now, we're trading around 1720 in the June. But let's take a quick look at what's happening here with open interest in the gold contract, because this is actually quite startling when you take a look at it, being this early in the month of May. You'll notice here the June contract had 259,000 open interest. It dropped 10,000, but you'll notice it picked up in the August. It picked up 12, and then it picked up another 1,100 in the December. I just wanted to show you that we're going to be moving over to the August very, very shortly. The fact that open interest is dropping now and prices are going higher, that means short covering. But if you have new buyers coming in on the August side, that's actually pretty good. So you've got a double-edged sword possibly here, and that's one of the reasons why you have to pay attention to the gold market here. I put the December gold contract in here just for memory purposes. That was one of my favorite things back in January of 1980. Hold on a second. I think someone might be calling in. Yes, there's a 135 pattern in the E-mini S&P. That is correct, Marshall. Good for you. But back in January of 1980, what was happening was I was looking at a market that was we were trading at $865 an ounce on January the 20th, 1980, and the back end contracts, the December contracts for that year, were trading over $1,000 an ounce. And on that particular day, I was following. God darn. Folks, give me a second here. I want to get something going here. All right, let's. Okay. Yeah, the Gator saying he could remember when you didn't have to wear a mask in the 7-Eleven. Well, get used to the new thing. But anyway, back in January of that year, the back-end contracts were trading for over $1,000, I think $1,080, something like that. And it was December, and I was doing we didn't have the fancy chart stuff. This was, long before that. That was another 3 years before we got really good charts at our desk and things like that. But I was keeping a regular swing chart on the 15-minute on the August gold. I was watching it because I had Reuters. I could get it each day, but I couldn't get it all together, and so I had to keep track of it by hand. And Twentyman was there helping me, so it was not a problem. But I had a beautiful 3-drive to a top pattern, just like we were looking at here in the NASDAQ yesterday. A very, very nice one. And I said, well, I've got to take a shot at it here. So it was around 8. I think I went in around 855. The high was 863 and change. And when I called the order in, we were clearing our orders through Goldberg Brothers, and I talked to the youngest one, who was Ricky, and I said, Ricky, I want to sell a Christmas gold. It was limit up bid. I mean, so it was limit bid. You couldn't get a higher price. And so I said, I want to sell a contract of that Christmas gold. He said, Larry, he said, please don't do that. And he said, you're one of our best customers. And he said, we don't want you to lose money. And I said, okay, Ricky, I understand. I said, Ricky, how many people are in the pit? He said, oh man, he said, they're belly to brisket. He said, you can't even move in there. He said, you couldn't fall down if you had to. I said, Ricky, sell me 2 of them instead of 1. He said, okay, smart A, I will. And I'll tell you the remainder of that story a little bit later when we pay a few bills. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other Tigers and Tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, I have a question about gold, but I'll finish the gold story first, and that was Ricky told me, he said, okay, SA, he said, you're probably going to lose on this one. And so he came back with a fill immediately, and I said, Ricky, I want you to put a buy order in. I said $100 lower because the limit was $50. So it was up limit. I was thinking it might go down limit. And he said, you're kidding me. He said, they won't take the order. I said, sure they will. They're in there to take orders. They'll take the order. So he put it in, and I swear to you folks, within 20 minutes, I got filled on the downside. Gold dropped $100 an ounce, and that was the high of the market, and it stayed that high for 20-some years. 30 years. I think it was into 23 years. 2003, I think, was the low. But that afternoon, I left early, and I went over to the dealership, and I bought myself a little sports car with the money that I had made with that, and never to be touched again. And always loved that car, but I remember that story, quite a bit. But that's just one of those things. That's another one where you got SWAG. Just sophisticated wild guess is all it was. No, it wasn't a Porsche. I wasn't a Porsche. I gave up on Porsches in 1978. I had a 911S, and it was a piece of junk. And so I bought a Corvette, and that was okay. But I don't do that stuff anymore. Now I use a three-wheeler. I have one of those little smart cars that I stuff myself into. No, let's move on here to a little bit here, folks. We have a question from Mr. Z about the gold, how I'm handling. There's an old adage on the street here. Let me get this up here because gold's up another $3 or $4 since I posted this. You'll be able to see here. This was, I'm looking, you see you have a 3 drive to a 135 pattern, just absolutely perfect. Look at the symmetry there, folks, between the 1st of May, 7th of May, and the 12th of May. Just beautiful retracements. Each one of those is a perfect 786 if you believe in Fibonacci numbers. And Mr. Z said, what would be my next trade? Well, the old adage is there's nobody as bullish as a sold-out bear. And by golly, I'm bearish gold, but you can't fight the tape, and this thing looks like it wants to go higher. So if we just did a simple ABCD from May 1st, we've already completed the first one. That was up at 1735. You came down, what'd you do? You dropped, you'll never guess, $34 down to the 1698 level, and then all the way up again. We were looking at around 1752. If we get there, 1752, I am going to try the short side again because I believe in the cycles that Bill Meridian has been talking about, and also Andy Pacholi. I think that's what's going on. So I'll be looking at that right now. All I've done now is to move the stop so that you guarantee yourself $5, and then you don't have to worry about it. I know it's you're looking at it right now. We're trading around 1723. We're only $30 away, so that's what I'm doing. I'm just using a $5 trailing stop on this, and I'll see if it gives me what I'm looking for. Okay, now by the way, folks, I forgot. Shut the front door and raise the rent. Shane Smolian is going to be our guest today at 9:30. He's got some stuff to talk to us about the things that he's seeing in the Fed juice, and I think it's very, very important to look at it. I'm going to cover natural gas next, folks, because I know we had several questions about it. Here's what we were looking at yesterday in the natural gas. We'll get this up here. I'll show you here. If you remember, we were looking at the price of 176, and of course we went through there like melted butter. That would be $3 that you gave them for your educational fee. We went down to the 78% level, and we stopped right there. Now, this is the nearby natural gas. I want to show you this because we're seeing a lot of crazy stuff happening in these markets, folks. Look at natural gas for nearby. This is the May contract. Look, it's trading at 169, and if you take a look at what's happening in the August contract, you think it's on a different planet. Because look at this on the August. The August is trading at 2-something and change. I mean, it's trading at 205. So that's telling you there's some big swings in these markets. So it's very important that we able to take a look at it. Now, they talk about consumer prices. The most they've jumped in since, 1974? Well, that's not a good sign because 74 was the start of the big reset when we began the big inflationary run that took us through the 1980s when we had interest rates at 13%. But look what's happened to the cattle. And we've been following cattle for quite some time. And you'll notice here, they've had some really big moves here. Now, the reason why I put this chart up is you see these little dotted lines here where it says limit move. They're starting way back on the 12th of March. You can see those dots. That was either limit down or limit up, limit down, limit up, and limit down. I mean, that's what those are meaning. That means that trading halts at that time and it doesn't review. Like look at April 7th, okay? You were limit up on the 7th, and it opened the next day. You see it opened 4 cents higher, and then it starts down. So this is what we're seeing now. We're seeing limit moves everywhere, and we've got another limit move yesterday. So that means the market's probably going to go open higher today. Well, we've gone from cattle. We've gone from 76 to 97. That's a 25% increase, and they can't get people to come in and do the cutting and stuff. So this is why we're going to run into some problems. So you got to get used to eating the cheaper, types of meat, folks, ground beef and flat steak and stuff like that, because it's going to be, pretty expensive. I don't know about the Duffy saying about Big Mac's cost at $10. Listen, McDonald's is really, really smart when it comes to marketing, folks. They book that cattle stuff as far in advance as they possibly can for supply. Now, that doesn't mean it's not going to be a problem, but the one thing that McDonald's does is it uses the futures markets extremely well to get their supplies going. They have two cattle. This could have changed, though, but back in the years ago, the number one guy who supplied all the cattle, 40% of all the cattle in the western United States was done by a guy named Lad Hitch out of Guayman, Oklahoma. He traded through the commodity office there at for Conti Commodity there at Westwood in L.A. and really nice guy, super fellow. And I remember meeting him several times, and he was in the airport at Albuquerque on his way to Mexico with his family, and he was sitting there. He's 42 years old, just sitting in the chair, and they said, okay, let's get up and go. And he had passed away. He had a major aortic aneurysm and died immediately. He was taking a little nap, and he died in his sleep, and he was only 42. His brothers and the father and stuff continued on with the business, but that's neither here nor there. But McDonald's does take care of that. Now, that doesn't mean they're not going to pass on the that doesn't mean they're not going to pass this on or not. I don't know. So we'll see whether that's going to be happening or not. We'll have to do one thing at a time. Well, we got coming to the first break. I made it without making too many mistakes today, which is good. And we are going to have the Shane Man, the Wolf Trader, will be with us at the break, and he always has really good information for us, and we'll have a lot of fun. So hopefully he'll be calling in and have all his charts ready. He knows what to do, so we'll be ready to do that. Okay, we'll be right back, folks. I haven't got the key yet. We still got a few more seconds. If you have any calls to you want to chat with Shane about, it's 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I believe we have Shane Smolian as our guest today, the Wolf Trader from Florida. How are you, Shane?
Good morning. Can you hear
What do
me?
we have? Yes, sir. Spot on. You've got the mic, so show us what you have, my friend. I know you talked about the market topping on Tuesday. That's about as close as you can get. Congratulations on that. Was the Fed doing something or not doing something that gave you that tip-off? Or?
Well, I'll just clarify a couple of points about that. So I said it's out of its upside advantage. So the difference between a top and an upside advantage means is that we've lost any upside potential. In other words, it could just drift sideways. So it's not long, it's not short. It's just there's nothing going on. And so that's the situation that we're in right now. So I just don't want to confuse people because a lot of services, I know they're like top, bottom, long, short, long, short. So this is different. So we're in this period right now where there's no agreement. And I like to have an agreement between the Fed juice and the planetary speed index. So we'll get into that in a few minutes, but I just wanted to clarify that point.
Okay, great.
So first of all, I'd like to talk about our friend, the coronavirus, and I say that term loosely, but I think we need to track it to see how it's going. And right now, the cases have crossed over 4 million. We're 4.27 million. This is the global scale, and it looked at some point as if this was going to start tapering, but it's actually continuing on its linear path. And there could be a lot of reasons for that. I mean, one of the reasons is obviously there's more tests, so more cases show up. But the cases are steadily rising still, so just something to keep in mind, and I look at that. The next chart here, this is the chart of the radix chart right now up in the sky. And so what we see right now is the moon is in Aquarius, tracking in this direction here. The Mars just moved into Pisces. Mars is at the same degree as Saturn, which is always important to look at when those two are together. But the big feature in the sky that most astrologers are looking at is this Saturn-Jupiter-Pluto conjunction right here. And I'm going to talk more about this in the next newsletter. It's very tempting for people to blame these planets for the coronavirus, but I'm going to show you a few charts in a minute that show that's not the case. In fact, there's very specific transits that are showing the coronavirus over the world right now. And then our other friend here, Venus, just went retrograde, and it's going to be moving back towards its destiny with the sun as it moves closest to the Earth. Venus has had some beautiful pictures in the west sky in the last couple of weeks, but now it's going to be harder to see. You're not going to be able to see it as it goes towards the sun when it moves closest to the Earth. So when planets are retrograde, they're closer to the Earth, and that's why when you look up in the sky, you can see them. They look so bright and so brilliant, and they look like stars literally when they're this close. Mars will be retrograding in later, it's like the fall, like September. And when Mars retrogrades, it's going to be in the sign of Aries. And so Mars rules aggression. And when Mars retrogrades and it goes when it goes station and retrograde, that's a period of intense aggression. And Mars rules Aries. So the fact that it's going to go into a station and retrograde in Aries means that we need to watch out for heightened aggression in the world, possible global tensions. So I would just point that out. That's coming up in the fall. But obviously with the coronavirus, there's a lot of tension between different countries right now, and, blame game, who started it, where did it come from, all these different things. So just something to look at in the fall. Now, this was the first transit that I talked about. This is the coronavirus transit. This is the one that's talking about the world shutting down. And this is the Saturn and Admetos midpoint crossing the Aries point. Now, I want to point this out, that for this stuff to work, for astrology to work, you have to have some degree of rigor. And before these things happen, you have to have these definitions. They have to mean what's occurring in the world has to match what the planetary pictures describe. So it's very tempting just to say, oh, look, Saturn is with Pluto and Jupiter's with Pluto. That's what's causing the coronavirus. But that's not how it works. You got to have some degree of rigor. So we know that the Aries point is the world. So Saturn and Amigos, this is defining a shutdown, and this was the day of the shutdown. This was also right near the market lows on the 20th. So that's important because that's modeling the global shutdown. And this next one is describing the virus. Really, when you're talking about disease, you're talking about Neptune. Neptune rules disease. Saturn, Neptune together is the quintessential health aspect in astrology. But Neptune and Hades is disease. So again, we need to see this midpoint matching the Aries point, which is the world, which is right here at 0 degrees. And then also the node, which is connections and people, okay, is also here. And these are all at the same degree. This is the 4th harmonic. And right at that midpoint, which is the 8th harmonic, there's your Neptune and Hades. So here's your planetary picture of the disease affecting the world. And so this is what I talk about with the rigor of the astrology. This type of astrology, this Uranian astrology, was perfected over 100 years ago by the Germans. And this is really, really into precision. I mean, these are exact points within 1 degree. This aspect here is very slow moving, as we would expect with the virus. And this is going to really carry over into next year in terms of the virus. And this is going to go, I'm going to talk more about this in the newsletter, next month's newsletter. You can subscribe to this month's newsletter. I do talk about there's a transit that goes with this that I think affects the markets. And then next month, I'll talk about this aspect of the disease aspect of this transit. But these things need to make sense. So it needs to, like I said, there has to be a degree of rigor. And when we're looking at cycles, we need to have at least 3 cycles before we can say something is a cause and effect. But you look this up, this is textbook description of a disease affecting the world. It doesn't get any more clear than this. I mean, you could put this in a book of astrology to describe, the textbook definition of what's going on in the world right now. So this stuff is important. And this is why, as a Uranian astrologer, we look at the midpoints and we look at these exact conjunctions. So this is not just saying, well, this planet is over here, it's conjunct with that planet. This is saying, no, if you look it up in the book, it describes this. This describes the global situation right now. So just wanted to talk about that. For those of you who haven't had a chance, head on over to the YouTube channel, Wolf Trader Futures, and sign up. I do put some streaming videos there, some webinars. We've had a couple of attempts at this, but I think we're going to get this figured out here. So Wolf Trader Futures on the YouTube channel, and you'll get notifications if I'm streaming live on that. So now I'd like to go into the Fear and Greed Index. Now this is interesting because we're still relatively low on this. This is a relatively bullish reading. So we're down at 38. Even though we've rallied this much. So that's still a relatively bullish sentiment on this. So I would, I would think if we were at like some type of a major high, that we would be way over here, above 75%, but we're not. So people are still fearful. So at least from that perspective, it's still bullish on the market. So, and if we look at this fear and greed over time, you can see that we came off these lows near the March lows, and we came off these lows near the March lows here, and we're still nowhere near those over extreme sentiment levels of greed. So there's still plenty of fear out there in the market, and so that's just something to keep in mind. That's one perspective, but it's still a bullish one.
Thanks for staying with us here. We'll be right back with Shane after we take a break here. 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're talking with Shane Smolian, the Wolf Trader. You want to continue, my friend?
Sure. So I just like to give a quick...
Very interesting, by the way. I really enjoy this, so please continue.
You. No, I enjoy it too. This is a lot of fun. So I just want to talk about what's new here. I now have the Fed juice on all symbols. So what does that mean? Well, essentially the Fed's operations have become so large that it's affecting all the markets. So the way that I talk about this is very similar to the tidal influence of the moon. So if you look at the moon affects the tides on the Earth, but depending on where you are on the Earth, if you're higher up in the latitudes, like near Maine, the Bay of Fundy, that tide effect could be 50 feet. But if you're down at the equator, the tidal effect is less. It's like 1 or 2 feet. So I found the same things happening with the Fed. The Fed has a tidal influence on all symbols, very heavy on the S&P, very heavily on the bond, but all symbols feel it. So I've been able to crack that code. So that's a big upgrade. And then the percent statistics, this is super important. I now have statistics for each day and each week of the percentages of it moving up and reversing. And this allows us to fine tune the markets. And then also I have a currency newsletter coming. So for those of you who are interested in currencies, that's coming soon. So I just wanted to throw that stuff out there. Now let's talk about our S&P here. This has been a long, long buy signal from the Fed juice. The Fed juice has been in a buy for 7 weeks. So you can see here back around the 25th of March is when the Fed juice went into this buy. And the bars here are green and for the Fed juice. So you can see this has been a really choppy rally. This has been just like a boogeyman rally for both the bulls and the bears, because every time it wobbles, everyone says, oh, no, this is it. And then it goes up and the bulls are like, no, this is it. But the overall progress has been higher. So, this it just doesn't want to die. I mean, the Fed, I was looking at this. I was hoping it would go possibly into a sell yesterday. It didn't. And we got to wait for the data today to see. But the reason why there's no advantage, and I want to clarify this with people, is that I need to see the Fed juice here in alignment with the planetary speed index here. These two have to be together. Once they're not in agreement anymore, there's just no advantage. So right now, we're in this period where it looked like it was going up, but look, it came right back to where it was on the 5th. So there's no point to be in the market because there's no advantage. So the next possible low is coming in possibly around the 19th on the planetary speed index. So if this Fed juice can roll over, we could get a sell-off into that date. Now, we're running out of time. I mean, there's less than a week now until that low comes in, and I think the reason is that the Fed has just been so powerful into here. You know, the Fed is now buying ETFs. They're buying corporate bonds. So you have just so many operations going on. It's hard for me to track them all. I'm all day on the Fed website gathering all this data, and it's just constant streaming information coming in. But, you know, it's possible that we could have a down cycle that's just lateral. It's possible that that might happen. Now, this is the percent statistics I was talking about. So this is for this week, and we're in the two strongest days right now. These are the two strongest days of the week. So the latter half of the week is generally weaker. Now, it doesn't always play out like that. Like last week, it actually went up into those 2 days. But over time, this is what has tended to occur. And then also next week is one of the weakest weeks of the year. So it's possible that we could get at least a short-term sell-off here into these markets. But you can see here on this planetary speed index that the market has really been holding up during this we've had a sell pattern here, and it's been just kind of holding up. We've gone sideways, and this low is coming in right into here on the 19th. So there's not much time. But one of the things I would say to people is sometimes that this planetary speed index, the market tends to rally at the last second, like the last 2 days into that date. And we saw that before in the market. If we go back here on the 6th, you see right here on April the 6th right here, that market, it just went sideways, 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 and it didn't look like it was doing anything. And then the very last day, it shot up. So we can't rule this out that we could have a decline until we hit the 19th. And then, you know, it's going to be tougher because even if the Fed juice goes into a sell, you're probably just going to have a period of sideways. Now, if we look forward, if the Fed juice goes into a sell, if we do get a sell in the Fed juice, which I think it's going to happen at some point, I mean, it can't go on forever into a buy, but it has been very impressive. It's picked this whole rally up. Then probably somewhere around June the 1st, is the next possible shorting point after this next 519 bottom. You would get another high around the 1st. And again, this changes day to day, and this is why I have to watch the Fed juice with the Astro. You can't just look at a cycle and say that's what's going to happen. There's just no way. You have all of this QE coming in that's affecting this on a daily basis. So the S&P is an extremely difficult market to forecast. And it's very, very difficult if you're not taking the Fed into account. So this is why it's so important in the newsletter that I also send out email updates to tell the subscribers, hey, look, you know, the Fed juice is still in a buy, even though the Astro may say this. We need to put these two pieces of the puzzle together. And that's what's important. So this is why I think the service is really important, because it allows you to see what the Fed is doing and to put that into your trading plan. This is a raw picture of the Fed juice, and you can see that the Fed has been relentless in here. They're just continuing to push the juice into this market. So like I said, some of these down cycles may just be sideways periods. So we just really have to see. Now, I will say that from now until at least August, that the Astro is getting more and more negative. So there's a lot of negative Astro headwinds into here. So what I do with the service is I reconcile what does the Astro say and what does the Fed say? And so I put those two together to try to give you the best advantage in the markets. And sometimes that might just be saying, hey, look, there's no trade right now like there is now. But other times I'll say, look, there's an upside advantage or there's a downside advantage. And that's in the newsletter, the S&P newsletter. And so on the live service, we actually track 11 symbols. And all of those symbols have the Fed juice now on them with the percent statistics. And so I think that, you know, we give a really good picture now. I mean, we look at many different angles of it to try to put the odds in your favor. Now, it doesn't always work out, but I think I think we're covering enough bases here that we can start, it'll make sense at least. We can kind of make sense of what's going on with this market. And that's important because if you don't understand the Fed, this stuff's not going to make sense. If you just looked at this market, there's no reason why it should be hanging out here like this. I mean, with the economy shut down. But if you look at the Fed, you can really understand what is happening with this market. So that's what I want to emphasize, that I put the two pieces of the puzzle together. And it's not enough at the beginning of the month just to say, this is the roadmap. You have to say, this is the astrological roadmap. And by the way, here's what the Fed is doing. Let's put these two pieces together to see if we can figure out where this thing's going to go. And I think that's important. I mean, and that's what I learned because I got faked out for years from the S&P until I started incorporating what the Fed was doing. And so I look at the Fed because I think that is the governing principle of these markets. So this is a weekly chart here of the Fed. And my Dropbox is hollering at me here. Okay, so here's this. This is the weekly chart. So you can see that the Fed use is still just zooming higher on the weekly time frame. I mean, it's taking no prisoners here. I mean, the Fed is just continuously pushing money in, and we have all of these different operations that they're doing it with. It's not just the balance sheet. You know, the ETFs are important too.
Hey, we're going to take a break, and we'll be right back, Shane. Can you stay with us, please?
Sure.
We'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks and commodities, along with specific recommendations including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. And Shane, would you mind telling the folks some of the services that you have and how they can reach you?
Sure, Larry. Thank you. You can go to wolftraderfutures.com, and you can scroll down the website. The pricing plans are up here at the bar at the top. You can see them. If you scroll down, I've updated this yesterday. You can actually see the different features that each service is included with. We have the Gold Member service, which is this is the live daily streaming on Twitter. But the newsletter is a really good one, good value for the money. It's $39 a month. It's a very, very good introduction to this universe that I call this universe because we have all these different terms that we use with the Fed and all this different information. But, to understand how the Astro goes with the Fed, this is a really good way to get started. You can also sign up to be a free member. Now, if you go to the website and you just want to join the free email list, there is an opt-in list here. And I recommend that you do this because this is you become a free member, but put your email here because this way you'll be guaranteed to get on the email list. So you can get updates, periodic updates. If I have a webinar or something like that, you can just go there and sign up now. But this is, I think it's important to spread the word about this because I think, in the spirit of education, educating everybody about what is happening with the Fed, this is important with your trading decisions. And we have all different types of people from all different levels of investment skill involved with this. We have people from regular retail traders to retirement investment to banks and to funds that use this service. This is important because this is kind of a missing piece of the puzzle. And we know that things like pattern recognition work. We know that the Astro works, but this is, I think, an important piece that complements those other two to help you make better decisions about the market.
Wow, this is great. Listen, thank you very much for joining us, and we'll have you on again soon. I know we've got a lot of astrological things happening, but keep that good information coming, my friend. We certainly appreciate it.
Thanks, Larry.
And also, stay safe down there, my friend. You got a lovely family, and you want to keep them in the right direction. So I don't know what's going to happen, but we've got to be safe.
Thanks, you too. Stay healthy.
Folks. You bet.